Is a market meltdown on the horizon? The crypto winter is here, and its icy grip might be spreading to the broader stock market. Brace yourselves, because a potential S&P 500 correction could be looming. In this video, we'll dive deep into the alarming signs pointing to an imminent market downturn, from the catastrophic crypto crash to expert warnings and shifting economic landscapes. We'll uncover the factors that could trigger a stock market correction. We'll also explore potential strategies to navigate this turbulent market, so stick around as we unravel the mystery of what lies ahead for your investments. This video is for informational purposes only and does not constitute financial advice. The cryptocurrency market has been a roller coaster of emotions, with a recent plunge that has sent shockwaves through the financial world. Billions of dollars have vanished into thin air as the crypto winter takes hold. But the implications of this digital disaster might extend far beyond the world of blockchain. Barry Bannister, a seasoned Wall Street analyst and chief equity strategist at Stifel, has issued a stark warning. This crypto meltdown could be a harbinger of an impending S&P 500 correction. It's a claim that has sent shivers down the spines of investors everywhere. The correlation between Bitcoin and the stock market, particularly the tech-heavy Nasdaq, has become increasingly evident in recent years. These two asset classes have danced in tandem, with Bitcoin often acting as a leading indicator of market sentiment. Some experts believe that Bitcoin's meteoric rise was fueled by the same excess liquidity that inflated the tech bubble. If this is the case, then the crypto crash could signal the beginning of a broader market downturn. It's important to note that correlation doesn't always equal causation. However, given the unprecedented nature of both the crypto boom and the current economic climate, it's a connection that demands attention. The stock market has always been a whirlwind of ups and downs in recent times, leaving investors on edge. After a brief respite that saw a spirited rally, the market has encountered renewed turbulence. The broader index has experienced a pullback, with certain sectors bearing the brunt of the decline. This volatility has sparked concerns about a potential correction. As earnings season unfolds, investors are meticulously examining corporate reports for clues about the overall economic health. While some companies have managed to exceed expectations, delivering impressive results, others have fallen short, casting a shadow of doubt over the market's trajectory. The question on everyone's lips is whether these mixed earnings signals point to a broader economic slowdown or if they are merely isolated incidents. Inflation has emerged as a persistent headwind for the market. Although recent data has indicated a slight cooling in price pressures, the Federal Reserve remains steadfast in its commitment to taming inflation. The central bank's monetary policy decisions, particularly with regard to interest rates, will undoubtedly have a profound impact on market sentiment. As investors grapple with the prospect of further rate hikes, uncertainty has gripped the market. Zachary Hill, head of portfolio management at Horizon Investments, emphasizes the need for a broader-based earnings recovery. He believes that the market's sustained strength hinges on robust earnings growth beyond the tech giants that have dominated headlines in recent years. We need to see an inflection in earnings growth coming from the rest of the market, Hill asserts. Adrian Lee, managing director at corporate finance advisor Centris, highlights the challenges posed by interest rate uncertainty. The interplay of these factors has created a complex and dynamic market environment. Investors are navigating a treacherous landscape, grappling with conflicting signals and uncertain prospects. As earnings season progresses and the Fed continues to shape monetary policy, the market's direction will likely remain volatile. It's essential to approach the market with a long-term perspective and to avoid making impulsive decisions based on short-term fluctuations. Diversification and a well-thought-out investment strategy can help mitigate risks and enhance the potential for long-term returns. To fully grasp the potential implications of the crypto crash, we need to examine the intricate relationship between Bitcoin and the broader financial system. Over the past decade, Bitcoin has evolved from a digital curiosity to a bellwether for broader market trends. At the core of this relationship lies the concept of liquidity. Bitcoin, as a non-interest-bearing asset, thrives in an environment of abundant liquidity. When central banks inject money into the economy, interest rates tend to decline, making Bitcoin more attractive to investors seeking higher returns. Conversely, when liquidity tightens and interest rates rise, Bitcoin's appeal diminishes. This dynamic is strikingly similar to the behavior of the stock market, particularly the tech-heavy Nasdaq. The Federal Reserve's monetary policy has played a pivotal role in shaping the fortunes of both Bitcoin and the stock market. The era of ultra-low interest rates and quantitative easing provided fertile ground for both asset classes to flourish. However, as the Fed begins to tighten monetary policy, the impact on both Bitcoin and stocks is likely to be pronounced. Barry Bannister, a vocal proponent of the Bitcoin stock market correlation, believes that Bitcoin's price movements can serve as a valuable early warning system for the broader market. It's the availability of cheap Fed liquidity that drives the price of Bitcoin, end quote, Bannister asserts. Every single dovish pilot for the past 13 years has marked a sharp Bitcoin increase. Jonathan Krinsky, chief market technician at BTIG, reinforces the notion of Bitcoin as a leading indicator. Bitcoin has been a good leading indicator for the Nasdaq 100 over the years, he notes. While correlation doesn't guarantee causation, the evidence suggests a strong link between Bitcoin and the stock market. Understanding this relationship is crucial for investors seeking to navigate the complexities of the current market environment. For instance, during the 2008 financial crisis, both Bitcoin and the stock market experienced significant declines as the global economy teetered on the brink of collapse. Similarly, during the COVID-19 pandemic, both asset classes exhibited a sharp initial downturn, followed by a remarkable recovery as governments implemented stimulus measures and central banks injected liquidity into the system. These historical episodes underscore the intertwined nature of Bitcoin and the stock market, highlighting Bitcoin's potential role as a leading indicator of broader market trends. We've explored the mounting evidence suggesting a potential S&P 500 correction. From the dramatic crypto crash to the shifting economic landscape, the signs are pointing to increased market volatility. The correlation between Bitcoin and the stock market, coupled with the Fed's monetary policy tightening, creates a perfect storm for investors. It's crucial to remember that past performance is not indicative of future results. While the information presented here offers valuable insights, it's essential to conduct your own thorough research before making any investment decisions. To stay informed about market trends and potential investment strategies, hit that subscribe button and hit the notification bell. And remember, consulting with a financial advisor can provide personalized guidance based on your specific financial goals. This video is for informational purposes only and does not constitute financial advice.